So it is Friday night. I made a video earlier today and I was just watching TV, going through some of the news online, and it has just been brought to my attention that we have had another bank go down. And this happened today after markets closed, of course, on a Friday. Regulators seize another bank. It says here on the hedge, bank failures begin again. Phillies, Republic First seized by FDIC. And of course, it happens on a Friday. It happens after hours. And this did not make much mainstream news this evening, and it is now being brought to my attention. So I thought I would shoot a video on it while it is still fresh. So here we go again, more trouble in the banking sector, and please feel free to comment down below. This is the first one of the year. Here we are in April, and we have another bank going down. After markets closed on Friday, we get our first failure of the year. It says the FDIC just seized the troubled Philadelphia bank, Republic First Bancorp, and struck an agreement for the lender's deposits and the majority of its assets to be bought by Fulton Bank. Republic Bank had about $6 billion of assets and $4 billion of deposits at the end of January. The FDIC estimated the failure will cost the Deposit Insurance Fund $667 million. Around half of its deposits were uninsured at the end of 2023. That excluded $262 million of unrealized losses on bonds that it labeled held to maturity, which means the losses hadn't counted on its balance sheet. And I'm just reading this off the article from the hedge. Republic Bank's 32 branches across New Jersey, Pennsylvania, and New York will reopen as branches of Fulton Bank tomorrow, Saturday, which when you watch this video will be today, Saturday. You should realize, given that rates are higher now than they were at the start of the SVB crisis, Silicon Valley Bank, which means unless banks hedged hard or dumped their bonds at a loss, they're even more underwater now than they were then. I'm seeing videos bouncing around now about Wells Fargo and Wells Fargo being in very, very big trouble. Have you heard anything? I think that the majority of U.S. banks are in very, very big trouble. U.S. banks finished the year with almost $400 billion of unrealized losses on held to maturity assets. The assumption is this wouldn't be a problem because the Fed would cut a lot this year. But what if that doesn't happen? U.S. banks saw the largest outflows of deposits since September 2001. It looks to me at the moment that we are probably at most going to get one rate cut this year. And I think that would be a miracle at this point. And if it happened, it would probably happen November, December. I don't think it's going to happen. And I think that this is going to put a lot of pressure on a lot of banks. The banking crisis, without a doubt, appears to be back, ladies and gentlemen. What do you think about this? Is this a big deal? Not a big deal? Of course, it happens on a Friday after hours. Question is now, who's next? What bank is next? Is it yours? Is it mine? Is it a big one? Is it a little one? Is it a regional? We know that we are now in the midst of a commercial real estate apocalypse. What kind of problems is this going to cause? We know that a lot of banks made massive loans, bad loans, auto loans over the last couple years. And this is all going to have huge ramifications. And it's all coming due, ladies and gentlemen. They continue to kick the can down the road. They thought that the Fed was going to, cut 6, 7, 8 times this year. It didn't happen. And what if it does not happen? And what if the opposite happens? What if the Fed begins to raise rates? What is going to happen? This is going to be crazy. It really, really is. We are living in really crazy times. How are markets going to react next week? How will markets react next week with another bank going down? And now there is more talk of more banks in big trouble. We've been talking about this for a very, very long time. Did we really think that in 2023 that the 3, 4 banks that went down, that was it? It was over? There's going to be a lot of banks going down. It's inevitable. How does gold react next week? When SVB went down, you saw gold rocket. And I think that even though this is not getting the same attention, the people that are paying attention, the people that know, I think this weekend or Monday morning are going to be calling their precious metal dealers and they're going to be making orders. This is concerning because this is not the last bank to go down this year. This is just the first. I think we're going to see more banks go down, and I think it's very, very possible we could see a lot of banks go down. And, you know, Fulton Bank is going to take over and they'll take the assets, the good assets, but we'll be on the hook for the bad assets, just like SVB and all the other banks. We'll be on the hook for the bad ones, but Fulton will take the good ones. So we'll be left with the bill. And I want everybody to remember this too. Most people go, well, there's nothing to worry about. My money's insured by the FDIC. The FDIC insures about a half a cent for every dollar that is sitting in a bank today in the United States of America. They insure a half a penny for every dollar sitting in a U.S. bank today. Be aware of that. Is that just an incredible number? Let me repeat that. The FDIC is insuring your money for every dollar with a half a cent. So if we began to see a massive number of banks going down, it could be a long time before you ever get your money back, if you got your money back. You know, be very, very careful out there, ladies and gentlemen. I've been saying for years not to have a majority of your money in banks. Have enough to pay the bills. If you run a business, you're forced to be in a bank. I get it. And there's certain situations where you have to have money in a bank. But if you don't have to have your money in a bank, why would you have any more than what you need to pay your bills? You should be your own central bank. This is a really, really scary situation. Again, we are not out of the woods by any stretch of the imagination. This is another warning sign to all of us just how vulnerable and how fragile the banking system is. Your money, more than likely, is not insured because the FDIC does not have enough money to insure your money. They would have to start printing massive amounts of money, which would entail more inflation. This whole thing is just a house of cards built on quicksand. And I think if people really understood how bad the economy really is, and I think they're beginning to, if they really understood how fragile the banking system is, they would probably be running to their ATMs tonight, starting to get money out of their banks. I'm not really believing anything I'm being told now. I'm paying real attention to what's happening. But this is another wake-up call, ladies and gentlemen. And please comment down below. I want to know your thoughts on this. But, wow, this is another grim reminder of just how bad the U.S. economy is and the banking system. Every one of you should be your own central bank. I highly recommend that you have some money, if not a majority of your money, outside of the bank. You know, people always ask, you know, what's the solution to all this? Well, one solution to all this, one recommendation is don't be 100% in the system. The more you're out of the system, the more detached you are from the system, the safer you are. The more that you're in the system, the more that you're reliant on the system to eat, for the system to pay your bills or to manage your money, the more vulnerable you are, in my humble opinion. Be your own central bank. Have access to your own money. Have physical assets outside of the bank. Have some gold. Have some silver. Have some cash outside of the bank. You know, I just remember these bozos for years that would say, well, you know, the solution is just have your money in multiple accounts, have it in 3 banks instead of 1. I mean, well, that makes no sense whatsoever. If you don't trust the banks, if the banks are as vulnerable as you know they are, they're in critical condition, why would you put your money in 3 of them knowing that they're all in big trouble? Why would you not trust yourself more to protect your money than these banks? You know, people go, well, somebody could, you know, put a gun to your head. A bank could press a button and your money's gone that quick. I would take my chances. That's my humble opinion. That's why security comes first where I live. But I have no way to protect myself with somebody having the ability to press a button and wipe out everything. Remember that. I think we've got to now take more responsibility, be more self-sufficient than ever before, and take responsibility, ladies and gentlemen. I mean, this is really, this is really concerning. Republic First seized by FDIC after markets close Friday. And this isn't even making major news. It is now circulating a little bit more this evening, but here we go again, more trouble in the banking sector. And yet people believe everything is okay. They believe that the system will insure them, the system will protect them. I'm curious to know if this is going to do anything, if this is going to have any effect on markets next week. I'm really curious if this is going to have any effect on the metals markets next week. Comment down below. Let me know your thoughts. What are you doing to protect yourself right now? Are you getting out of the banks? Are you not worried about the banks? Are you in a big bank, a small bank? Are you, 50% in, 50% out? Make sure that if you have valuables, jewelry, heirlooms, gold, silver, that they're not sitting in a safe deposit box in a bank, ladies and gentlemen. That is the worst possible place to be keeping this stuff. I know that people think their money's safe in a bank. It is not. Your assets, your valuables are not safe in a safe deposit box in a bank. This is another reminder, ladies and gentlemen. I cannot stress it enough this Friday night. I just cannot believe what is going on with this economy. And markets up across the board today. Then when markets close, they drop the bombshell here that another bank has been taken over by regulators. It's not good. Who's next? Who's going to be the next one? Be careful out there, ladies and gentlemen. Be careful where you're putting your money. Be careful who you're listening to, who you trust. Start listening to yourself. Start trusting yourself. Start doing your due diligence. Start believing in yourself and managing this stuff and learning about this stuff. We got too many people watching baseball games that better start paying attention and watching what's happening to their money, their retirements, their banks, their jobs, their purchasing power. People better wake up. This whole thing is beginning to accelerate out of control. We're going to wake up one day. It's going to be a different world. And most people are going to get completely wiped out. Be careful, ladies and gentlemen. God bless. Have a good weekend.